GM, everyone. Welcome back to the SolanaFloor weekly recap, where we break down Solana's biggest stories straight from the SolanaFloor newsroom. Now, we're going to break down what's going on in the ecosystem, what's just noise, and most importantly, what's actually worth your attention today. I'm joined, as always, by our senior journalist, Finn. GM Finn.
GM Jack, how are we doing?
We are doing good. We could definitely be doing better, I feel. This week has been interesting ups and downs, so I'm curious to take both of your takes on it later on. We have some good news, we have some bad news, as usual. And of course, Mr. Thomas Bahamas is also with us here. Thomas, GM to you, sir.
GM. Sentiment's a little rough right now out there. You know, I was pretty optimistic for a little bit there. I mean, we're going back to the moon. We got a Kanye West album out, and you know, it didn't quite end as good as we thought. So we'll have to go over this drift hack, right?
We're going to get there. We're certainly going to get there. Now, as you both mentioned, we have a lot to discuss. Sentiment is in the gutter after the events of April 1st. But yeah, we'll have a very lengthy conversation about the drift exploit, I'm sure. I should mention here, by the way, if anyone is looking for more details on what happened, why it happened, how it happened, etc., we did cover it minute by minute with tweets. We did a video deep dive. We have long form articles. And the SolanaFloor team has also created a comprehensive contagion report, which was nice to see, but it was shared by a fairly long list of publications as well. So you can get more information on SolanaFloor. Now, going back to Monday, though, interestingly, we sort of suspected at the beginning of the week that we'd be talking about clarity anticipation. We thought we'd be talking about price swings due to macro uncertainty, oil, all the rest. We thought it was going to be fairly similar as far as the news and the headlines to last week. Lo and behold, halfway through the week, we're talking about a quantum threat. Google published something that we'll get into in a second. And we're unfortunately ending the week on a fairly somber note with that $285 million exploit of Drift. Heartbreaking to see. Now, for context, Drift previously had over $500 million in TVL, right? So this is not a small protocol, very significant part of Solana DeFi. And the news hit us all very, very hard. So I hope everyone has a speedy recovery if you were affected at all, or if you're part of the protocols that were affected. We'll dive into the full contagion report and see what we can do best. Going forward, a lot of lessons have been learned this week. So quick temp check before we get into Finn's juicy, spicy newsletter. Let's start with prices. The stock markets, I should say, are closed for Good Friday, but crypto is, of course, 24/7, so no sleep for the wicked. We're looking at another Red Friday, largely speaking. We joke about Red Fridays in general, but on the week, we're not doing too bad. So BTC is up 1% on the week at 67K. ETH is just above $2,000, where it has been for quite a while, but still somehow 4% up on the week. So maybe that's something to do with ECC happening, a bit of an ECC pump. Sol, unfortunately, as you might expect, is slightly down on the week, 3.6%. Now trading at about $80. So with prices out of the way, the world's attention is obviously still on the macro, all the conflicts that are going on, both in the Middle East and between Ukraine and Russia, unfortunately. But let us, for a second, shift our attention inwards, fellas. I want to get a temp check from the two of you, where we are in the cycle, where we are in terms of sentiment. What are your thoughts of the last sort of 7 days, Finn, Thomas? And I'm going to pull this newsletter up in the meantime.
Yeah, look, I think sentiment is at a point that is as low as we've seen probably in the past few years. You know, we've had months and months of bad price action. We've had absolute chaos in geopolitical tensions that have kind of really exacerbated some of the damages that we've seen on chain. And then this enormous drift hack is kind of the piece of straw that broke the camel's back. DeFi trust is probably at an all-time low. No one wants to be, putting their stables, putting their coins to work anymore. Yeah, trust has been shattered a bit, I think, by this, because Drift was it was a cornerstone of Solana DeFi. They were absolutely everywhere. There was dozens of apps that were building off them using Drift as a yield engine. So the repercussions from this hack have been absolutely brutal. Thomas, how are you feeling about it?
Yeah, I mean, I can't echo that enough. Like, to see like the ripple effects of this is brutal. People just looking for yield on stables, going risk off and still, managing to see that risk a little bit more than they should. So, I mean, it's really tough, right? Sentiment's down. The prices have been down for a while, but I mean, when you went over those prices, Jack, like the prices aren't really down that much. Like in my opinion, like it looks like the charts have been, down. We're kind of at like those like, support levels, and we're hanging on pretty well. Like with all the news that's going on, you would expect like some more drawdowns, I think. So the fact that we haven't gone down, I think, shows a little bit of light here, but it's tough out there, I mean, especially for the Solana community. I mean, as a whole, I feel for everyone that got affected, and I think a lot more people got affected than should have through this. So it's a tough time, right, Jack?
Certainly is. And we're going to look at the contagion report. We know at least 20 projects have acknowledged some degree of exposure. Some are far more exposed and impacted than others. We know a couple of projects have sort of decided to refund users for any damages. Others might not be in a position to do that. So the contagion report is quite interesting. We'll get to that in a second. Let's pull up this newsletter. And TV, your optimism there was definitely not lost on me. I appreciate it when we look for a sort of silver lining in all the bad news and the headlines that we see. So it is refreshing to hear that not everybody's lost hope. Finn, your newsletter this week opens with 20 plus ecosystem apps were hit in the devastating Drift protocol exploit. It certainly was devastating. Talk us through it.
Yes, so obviously the dominant headline of the week is the Drift exploit. It feels difficult to talk or think about anything else. Even kind of going back through these stories from earlier in the week, I was kind of shocked at how long ago they felt, because there's so much has happened since the Drift exploit started that it feels like it's kind of blown everything else out of the water in terms of scale and in terms of importance. But that said, it has been a week full of activity. We mentioned the quantum threat earlier. Google says we've got until 2029 to basically pull our heads together and find a solution. There was another MetaDAO ICO that, while these are generally plagued with controversy, this one was given an even larger layer by the team that was actually raising, was also dipping their toes into the bit of poly market trading, which, whether you love to see it or not, it's certainly uncharted territory for MetaDAO. But like you say, there are silver linings. It's not all doom and gloom. SoFi is making big moves on chain. They've launched a new product called Big Business Banking, which sounds a bit silly, but is apparently quite sophisticated. So that's very, very exciting. And we've got talk about untapped meta brewing up behind the scenes, which I'm very, very excited to get into.
All right, we can dive into all of that alpha in just a second. So let's go ahead and start with story number one. In a way, I feel like we could do a whole hour and a half talking about what happened. But again, just want to repeat myself here. We have been covering it minute by minute. So if you want tweets about what happened, if you want the contagion report, if you want a deep dive video, if you want a full article, then you can go to SolanaFloor.com or SolanaFloor on X account, and you will find all the information there. We also hosted a Spaces yesterday with a couple of security experts and community members. So that was quite eye-opening as well. And yeah, it is a heartbreaking situation. We will do our best to cover all of the details without spending an entire hour talking about it. So the headline is Drift Protocol, $285 million exploit, everything you need to know. Now, Finn, this article that you wrote, it goes into a lot of detail about what happened, which of the ecosystem apps were affected, to what degree they were affected. And something interesting that stands out here is Circle's involvement. I've seen a lot of memes saying Circle were basically asleep at the wheel. And I find that quite an interesting angle. So, whether or not Circle should have acted unilaterally, decided to freeze some of these stolen funds is an interesting debate. Could they have done it? Should they have done it? Right? Big debate raging there. So let's start with the story. Let's look at the contagion, and then maybe we'll get back to Circle and figure out why everyone's so angry.
Yeah, 100%. So obviously, I think at this stage, everyone has a pretty good idea what happened. Basically, malicious actors were able to gain access to 2 of 5 multi-sig operators within the Drift protocol admin authority. They were able to take advantage of that. They removed withdrawal caps. They created a fake asset, and they basically borrowed the entirety of of Drift's TVL against this spoofed asset that they artificially inflated. And in doing so, they basically they drained the entire TVL of Drift. They bridged it over to Ethereum relatively quickly. Huge losses across the entire ecosystem. JLP was unaffected, so that was good. That's kind of a silver lining there. But look, yeah, devastating hack. $285 million sent over to Ethereum. That's now sitting in the same wallet that you know, the entire crypto ecosystem has got their eyes on very vigilantly. Drift has issued a statement basically explaining what happened, and they've also sent messages off to that wallet, just trying to negotiate, trying to make a deal, trying to see what they can get back. I think it's important to mention at this stage as well that Drift's validator is actually unaffected. So if you're holding DSOL, you're right as rain, you're okay for the time being. The attack itself was, I think, the second largest in Solana DeFi history, if I'm not wrong, falling short of the portal hack in late 2021, I believe. But yeah, the impact of this was just absolutely massive. I think I haven't felt sentiment so low. I haven't felt trust in DeFi so low since this all went down. As we mentioned, we've got a contagion report there with about 20 different apps. So many teams were using Drift as a yield layer. Teams of all sizes. You know, there was teams that have just launched, that have just, you know, put a new product out. There's also teams like Squads and through the Fuse wallet, they've been using Drift for a very long time. So look, if you're wondering if you might have been affected, check out this contagion report. It's got a very comprehensive list of all the teams affected, the actions they've taken, and what to expect next. But generally, this is a very, very dark, difficult day for Solana DeFi history. Thomas, you were pretty deep in the weeds on this. What's your knee-jerk reaction? Do you think that perhaps there should have been more security in place? I know you guys spoke with a couple of security experts yesterday with Sotora. What was the main takeaway from that conversation?
Yeah, I mean, first of all, it was a great space, and we had some fantastic security experts on that space. And I mean, this was a very sophisticated attack, right? You know, you would assume that, you know, you have a multi-sig set up, you have some security parameters set up, and you're safe. But I mean, hearing how they were actually able to get access to this, what they went through, like the amount of time that they spaced it out in, like it's pretty scary overall. I'm nervous for my own security setup at this point if, you know, a team can be exploited like this. So it definitely will have implications on it. I do want to give a quick shout out to the SolanaFloor team, though, our editors. You know, I know Sheldon and Jack stayed up, you know, for an incredible amount of time, and I was trying to help them, you know, uncover the latest stories and look at what was going on. And pretty much anytime I sent them a link, they already had it and they had already posted about it. So you know, the coverage moved quick. You know, the news, of course, in Solana moves incredibly quick. And I think that what they were able to do was fantastic. But yeah, I mean, hearing about the way that things were done, should there have been more security protocols set up for this? Probably. But I mean, it's hard to know. I mean, you know, I myself, like I wouldn't know what to do if I was one of the signers with $500 million, you know, on the back of it. Like I would be incredibly nervous to do anything. And I'm sure that they've been through audits, right? I'm sure that they have security protocols in place and they were following them. You know, this is, you know, I wouldn't say necessarily like a novel attack, but it's a different attack vector than what we're used to seeing, I would think. So I don't know, man. It's tough. Like the implications of it are tough. I hope that we see this more of like a speed bump for Solana DeFi. We all learn from it. We can all, you know, learn what the best practices are, how we can move forward and not see this happen. But yeah, I mean, it's just it's tough. I mean, what's your takeaway there, Finn?
I think like a lot can be said about, you know, what security measures should be in place, what they could have done differently, and that always looks different in hindsight. One of the quite remarkable things that has been that since this has happened, obviously everyone on Twitter has been looking into the multi-sigs of other teams, people making dashboards, so that we can, as a collective unit, everyone can lift their security practices together. So we can, you know, hopefully build a more resilient and robust DeFi ecosystem entirely from the ground up. The missing piece in here, I think, is Circle's involvement or Circle's lack of involvement. You know, there's an argument there that if a malicious actor is sending $280 million from one chain to another through Circle's CCTP, Circle should probably step in and do something. Circle was active during the time that all this was happening. Circle was actually minting new USDC on chain, so it's not like this attack happened in the dead of the night and no one saw. Yeah, a lot of people coming for Circle now. ZachXBT is just released a whole file on all the times that they could have acted and didn't. Yeah, it's And Circle actually still hasn't released a statement. So we still don't know if they're going to address this. We still don't know if they're going to come forward and say, put their hand up and say, yeah, we should have done something. On the other hand, the counter argument to this is that if we are truly DeFi centric, if we want to believe in this prospect of decentralized finance, we shouldn't be running to Circle to solve these errors and to make sure that we're as safe as we can be. It should be hard baked into the code. Codes should be immutable. There should be no upgrade authority. People shouldn't be able to take complete administrative control over an app and restrict the withdrawal limits so easily. So look, there's a lot of work that needs to be done probably on both sides of the fence, whether that's for teams like Circle and whether that's for teams within DeFi as well. Jack, what's your opinion on that?
I have a lot of opinions on this. Let's sort of work backwards. Start with Circle here for a second. So I'll start with Zach XBT because you mentioned him. The most recent report that he put out is about $420 million of theoretically funds that could have been frozen, funds that have either in the moment or later on retrospectively been linked to malicious actors. And to your sort of philosophical question, Finn, about is it DeFi if CCTV can be paused? Is it DeFi if Circle can turn around and halt these things? Very good question. I don't necessarily have the answer to it. We can only really work on precedent, right? Think back to the early days of Ethereum when I believe this was just after the ICO. So they raised like something. No, there was a $60 million theft, if I'm not mistaken about the number. So somebody found a smart contract issue that they could exploit where the same withdrawal function could be repeated. So they did that and they took about $60 million worth of ETH. And Ethereum is, as you know, based on what Vitalik Buterin's been saying for the longest time, supposed to be completely immutable and decentralized as well. Yet they made a collective decision to sort of roll that back and take the $60 million and sort of redistribute it. Then you ended up with Ethereum Classic, and then everyone else that sort of went to the hard fork, which was the Buterin camp. So the point is, even in the initial stages when smart contract exploits were being found and used and people were being robbed, a community of DeFi believers kind of got together and said, look, it's bad optics, it's bad for us financially, and we might be willing to sacrifice some of that decentralization to stop these bad actors and not set a precedent for it. Now, I feel like we've moved away from that. It's ups and downs. The sacrifice of decentralization, sometimes if you're saving the entirety of the system, might be a valid sacrifice. Not in its entirety, but a partial sacrifice of decentralization. Anyway, without rambling about what happened and crying over spilt milk here, it is a massive shame that Circle didn't act. Whether they should have done or could have done is a different story. We can only comment retrospectively. And of course, we're not in a position to make these sort of sweeping unilateral decisions. Going back to what happened, I want to just pull up this contagion chart again and leave it here for a quick second so people have a chance to look through it to see if they have any exposure to any of these protocols. And if you do, then again, you can go to SolanaFloor's X account or solanafloor.com and see the full chart, the full table with what happened, how much financial exposure there was, and what the teams have said to try and sort of shelter yourself from any further damage. Of course, don't interact with Drift protocol for the time being. Don't make any deposits. And I believe Monday or very early next week, we will be hearing from the Drift team with a full postmortem. And as soon as that does happen, we'll be able to share more information with you. But again, for the time being, stay safe. I feel like we could talk about this all day. Right, but there's unfortunately no sugarcoating it. If you start with $500 million in TVL, lose more than 50% of that, and then 20 of your integration partners get impacted by this exploit to varying degrees, as we said, it damages the entire ecosystem. It damages trust, as you were saying earlier. We will of course recover from this. It doesn't in any way affect the ecosystem in any systemic sense, but it is a bad look for Solana DeFi. However, I
do want to jump in though, and there is a silver lining that I think is worth mentioning, and that in this circumstance, there was no smart contract fault, there was no bug, there was no problem with the actual tech. This was a result of human error. This was a compromised key, likely a bit of social engineering behind the scenes. So look, you can take, I think DeFi users can take solace in the fact that the code actually works. I think we just need to be better at managing it with our own human hands.
Infinitely better, infinitely better. And this is one of the points that came up in the spaces that we had yesterday with security experts. We had Seth from Satora, one of the biggest formal verification firms out there. And everyone sort of agreed that we've come so far from 2021, 2022, when smart contract exploits were almost commonplace. So we've improved massively on a code and smart contract level. The issue now is we seem to be at an all-time high as far as social engineering scams go. Wrench attacks were also mentioned as a new attack vector that's sort of rising to new all-time highs. The point is, we are now in a position where, okay, the infrastructure is safe. We need to learn how to behave differently, I suppose, change our behavior a little bit as operators on DeFi. But fully agree with you, Finn. We've definitely come a long way. It wasn't a smart contract mistake. It's not like we're looking at another FTX, right? There's no fraud here, as far as we can tell. It wasn't a technical exploit. People make mistakes, and
and I think
we'll find out on Monday what the full report is.
Oh, sorry to butt in there. And I think Seth from Satora even said that now, like when he looks at risk, it's 50% social engineering and 50% secure, like smart contracts. So for that number to be that high, it really put me on high alert. Like, okay, what are my risks? And I mean, every day you get some sort of phishing email or something along those lines. So it really brought it home for me.
Don't open emails, folks. Ignore them all. Okay. Again, we could talk about this all day. We have all the information on SolanaFloor.com. You can go and find it there. Let's move over to story number 2. This is about MetaDAO extending their P2P.me ICO. There's some insider trading allegations here, and honestly, I feel like it's peak chaos, crypto chaos here at its finest. But it's the kind of chaos that I would have expected to see in a bull market more so than a bear market. So the headline is, let's pull up the newsletter so people can see what we're looking at as well. Now, the headline is, the only way out is through. MetaDAO extends controversial P2P.me ICO. Sticky one here. Finn, the headline is controversial as well, but the decision, the ICO was controversial from the start. So I suppose it's fair enough that you have a controversial headline covering it. The insider trading allegations, let's get into those. Let's talk about the fact that they called some of their critics retards, which is not a good look. And then there were refunds involved, bit of a mess. After we hear about the story, TB, I know you're generally a fan of MetaDAO and sort of on-chain capital formation. I am too, but I think you're a bigger fan of it than I am. So Finn, talk us through the story, and then I'm curious what TB thinks and whether or not TB's perception of MetaDAO and on-chain capital formation is changing in any way. Take it away, Finn.
Right, so I might actually foreshadow a bit of an inverse TB approach here, and that this is actually making me more bullish on MetaDAO and ownership coins as a whole. I think this quote, "the only way out is through" from Profit, I think it's fascinating because it suggests that MetaDAO and ICOs and the decision market phenomenon is heading back into uncharted territory. It's quite rare these days in crypto that we go somewhere that we haven't gone before. I feel like we see a lot of ideas get recycled over the years, but here we're really kind of pioneering. We're in a trailblazer zone where we're dealing with stuff we haven't really seen before. So look, the story as it goes, the premise is P2P.me was doing their ICO through MetaDAO. About, I think, 2 weeks before the sale started, the P2P team made bets that they would reach a certain raise amount through the process of the sale. And as the sale went on, obviously people discovered this. You can see here in this image within the newsletter that the total commitments for the P2P protocol public sale on MetaDAO, the P2P team itself had 24,000 shares in that. Now, whether you call that insider trading, whether you call that the team just backing themselves, that's up for debate. But as people discovered this, obviously there was FUD all across the timeline on Twitter. People saying, look, this team is actively insider trading their very own raise. You don't want to go near this. Initially, the P2P team hit back at that. As you mentioned, they called everyone retards. They told them to study conviction. Things escalated. It kept getting worse. And then a few hours later, the P2P team actually came out and said, you're right, this is our wallet. Sorry about that. But they remained committed to seeing it through. And I think MetaDAO's response to this was quite fascinating. MetaDAO's response, after some careful deliberation, they said, look, all the funds who had invested in this, they're not pulling out. The product still exists. It's still making revenue. Yes, there's some concerns around the trading activity on Polymarket. MetaDAO kind of came out and said this is almost closer to a guerrilla marketing stunt gone wrong, rather than something with general malicious intent. I think the size of the trade was only about $20,000 as well on the 6 million raised. So a lot going on there. But look, it's a fascinating story. Since then, the token's actually gone live. It's down about 15% since launch. People were given 2 days to claim their refunds. The sale went ahead, and life goes on for all parties involved.
I'm gonna hop in here really quickly. I do want to hear from Thomas and well, the two of you, because you have very strong opinions. We're gonna comment here before we get into the what you're seeing on screen here is the insider trading responses, and some people have basically pointed out that it is illegal as far as they're concerned. We don't necessarily know that it is illegal, but we have a comment here, and it's quite interesting. How can you really vet these projects? I think this sort of speaks to the reason why on-chain capital formation exists, and often why it's so controversial as well. So yeah, the floor is yours. How can you vet these projects? Can you? Is it possible? Do we just have to roll with the punches, and it's sort of a trust me bro due diligence process? What's going on?
I think in this example, there was a lot of dashboards and a lot of on-chain data pointing to P2P.me's metrics. And you can trust those, you can verify those yourself, or you can run your own metrics. Look, I think the Futaki model, the decision market model, as we've seen, for me, it's kind of a libertarian's dream. You get all the information you can possibly have. And if that information ends up being false, if you end up being lied to, you can take measures like we saw with the Ranger Finance proposal, and they liquidated the treasury on the basis that Ranger was misrepresenting its revenue. So look, obviously it's not a perfect system. Obviously you do your best to vet projects as you can. But I feel like at this stage, MetaDAO has proven that, if someone tries to pull the wool over your eyes and you get deceived, token holders can actually take action there. So look, I think, yes, it does look like insider trading to me. That's terrible, frankly. I think that's a great shame. But look, everyone knows about it. Everything is laid out very clearly. It's very, very transparent, and people can, they can have their refunds. They can opt to try and dissolve the treasury. I think there's always going to be drama. There's always going to be chaos. But this model gives people the power to actually impact on information that's publicly known. Thomas, you're closer to this than me. What's your knee-jerk reaction here?
Yeah, I mean, it's just a weird circumstance, right? Like, why did the P2P team do this on a known wallet? Like, it just seems like kind of blatant what they were doing. And, I mean, this is pushing the boundaries of MetaDAO, right? I like MetaDAO. I like the team. I think they're deep thinkers, and I like the way that they're approaching this, but it's challenging the model. I mean, you have to kind of rethink this, and, I think early stage and venture capital is very, very tough. Like it's just a tough model. So to open it up to everybody, it makes it even tougher, right? In traditional finance, in order to be able to invest in a lot of these deals, you have to be an accredited investor, right? And there's a reason for that. These deals are very risky from the start. You talk to any big, venture investor, and they'll tell you, like, a lot of these deals are going to go to zero, and some of them are going to 1000x. Like that's the play. So to open up, a very risky investment to everybody is, the issue that we've had with ICOs for years since this first started in 2017. I think this is a much better model of the ICO because of the transparency, because there is that way that, if you lie as a team, we can pull back all that money. I think this holds people accountable to them. But we're going to see some edge cases. I do have confidence in the team and that they'll be able to adapt to these. But the last couple of raises have been pretty rough, right? Ranger pulled theirs back, and now this is a shit show any way you look at it, right? Like it's like hard to look at this and like think like, oh, this is the best thing that I've ever seen. Like this, it doesn't make you want to like buy into the MetaDAO token right now. you know, it's definitely like a challenge on it.
It's bad optics. But
It's
yeah,
yeah,
the point is it's the second time, or in a row at least, right? It's the
yeah,
second consecutive time that we're having a conversation about it being bad optics. And you'd sort of think that people would learn and maybe not use a wallet that everyone can sort of clearly see where the funds came from. So my gut reaction to it was, well, they're really not trying to hide it very well.
yeah.
So maybe it was less foul play than people initially thought. But listen, we could talk about this all day. I think it's probably going to be a bit of a setback in the immediate term. In the long run, to your point, Finn, I certainly hope that this is going to push MetaDAO and this on-chain capital formation experiment that we're living through at the moment closer to some sort of perfection, some sort of final form. We're certainly not there yet. There is a lot of work ahead, but as a concept, it's not going anywhere. As a system, it's only going to get better and iterate over time, I think. Now, we do have to move on to our third story. Otherwise, we'll be stuck here for the rest of the day. Today we have a good story. Something that's like a bit of a feel-good story. A lot of people came out and said it's actually a nothing burger. I don't think it is. I think it's a slow burner, right? So moving on to story number 3 of the week from Finn's delicious newsletter. Let's see. The headline here is SoFi launches big business banking, plans to leverage Solana for enterprise fiat and stablecoin banking services. Now, big business banking isn't a Eastern European or Balkan meme. As Finn mentioned earlier, it turns out it is quite a sophisticated system. So no memes in this article, but it's worth talking about because at first it seems like a nothing burger. As I mentioned, people are saying, oh, the liquidity is really not there. But again, turning out to be a bit of a slow burner. So Finn, SoFi is this huge company, right? I think $36 billion or something. And they've chosen Solana for enterprise fiat and stablecoin banking services. Walk me through what this means.
Yes, so SoFi became the darling, the TradFi darling of Solana's heart last year when they enabled direct native SOL purchase through their retail-facing app. It's a $50 billion bank. They've got $50 billion in deposits, and it's a very, very big name in the US, as I'm sure Thomas will be able to attest to. Obviously, we don't have access to this big business banking product that they've launched, but from what it sounds like, banks are embracing the Web3 energy. They're going 24/7, 365 because that's the nature of the future. That's the nature of the global economy. And SoFi is one of the first to really, really embrace this. So they've launched this product. They've got all kinds of TradFi giants and crypto heavyweights joining up. I think Wintermute's involved. MasterCard's going to be using it. And essentially, the idea is that SoFi is going to be effectively running kind of an on-chain settlement for a lot of its institutional banking clients. Thomas, you probably have a much more familiarity with SoFi than I do. What's your read here?
Yeah, I mean, it sounds like SoFi is going all in on Solana here, right? To actually use them as infrastructure. I mean, not only did they allow purchases of SOL on there before, I looked into opening an account last time, and now it's like, all right, they're doing enough to where I need to look into it a little bit more. But I think this speaks to like the bigger picture of, banks and stable coins, and like having the infrastructure using stable coins, and that's the future, right? Like, I think eventually all of these banks are going to be doing this. I think that SoFi is just a little bit more of like a early adopter of it. I think that neobanks, like we're seeing a lot of wallets, we're seeing a lot of like crypto native neobanks. And I mean, we're essentially seeing them both like collide. They're going for the same thing. I don't know who the winner is going to be on this, but I don't think any of the newer banks are not going to have some sort of stablecoin infrastructure here. So, I mean, I think it's an exciting time, and it's good to see them choose Solana, obviously. What do you think, Jack?
By the way, quick correction here. I said $36 billion earlier there. That figure is in fact from November, which is when they first launched a crypto product. As Finn mentioned, we are now at the $50 billion mark as far as their deposits go. TradFi coming on chain, right? We've been talking about this for months, if not years. It finally sort of dawned on us when we were in Abu Dhabi during Breakpoint that they were here, not in any meaningless way, but in a very, very significant way. We were in the same booth talking to some trillion-dollar asset managers, and they're very much here in every sense of the word. So I'm going to throw it back to you, Thomas, because I'm curious what you think as far as SoFi being a validation here, right? And I want to go back to that earlier comment about it being a bit of a nothing burger for the time being. Having spoken to some of these, TradFi giants, does this feel like it's actually a story with a lot of gravitas, just because they have the MasterCard integration, just because they have $50 billion? Is that really meaningful, or are the real developments still to come?
I think it's incredibly meaningful, right? Like, if I could just send stablecoins direct to my bank, that would be huge. Like, the idea of that, like, if you go back 1 year, maybe a year and a half, like, the idea of, off-ramping any sort of stablecoin from a wallet to a bank, like, I used to have to one hop to a different bank to send to my main bank because I didn't want my bank account to be shut down. Right now, the banks are like, they're competing for my stable coins, right? They're like, hey, send it here. Bridge was purchased for over $1 billion by Stripe. Like, there's a lot of competition instead of regulation, right? So I think in general, this is bullish. Like, we're not gonna, this isn't gonna be like an instant thing that turns, SoFi into a, $1 trillion bank or anything like that. But I would assume that they are going after the crypto natives like myself in the US that have run into that problem before. If they're like, hey, we're a bank, send your stable coins here, we'll hold it, it's fine, it's great. And if they, can figure out great ways to store it for people, this is a huge win for us. So I'm excited about this, and I'm excited about the move towards this in general from TradFi. So it's exciting times.
Yeah, it certainly is. Just on your point there about storage, I think Finn briefly mentioned this as well. Some of their partners include MasterCard, Wintermute, and Galaxy. So definitely heavyweight participants are involved already. Now we're going to move over to story number 4. This is an interesting one because for about 24 hours, it was the doomsday clock is ticking down. We are facing as an industry the most catastrophic fate imaginable, and then it turned out that, of course, wasn't the case. So story number 4, a bit of a wild roller coaster as far as headlines go. Quantum computing threats, right? People went, oh dear. Headline here is, Google wants quantum computing could break crypto's encryption by 2029. Can Solana survive this? Let's find out. So the story, again, is about the quantum threat. Is it an existential threat or not? We don't really know. Luckily for us, as Finn, I'm sure, is going to explain to us in a second, it turns out Solana leadership, Solana Foundation, figured out that this was going to be a bit of a problem a while back, and that they have been addressing it. They've been thinking about it. So Finn, 2029 it feels like it's around the corner, right? But then if you look back in time, 2023 maybe feels like a long, long time ago. 4 or 5 years ago, yeah, again, feels like decades. So talk me through the seriousness of this threat. You've been reading up on it. Is it really existential?
Look, obvious disclosure, I am by no means a quantum researcher. This is very, very far outside my wheelhouse, so I'm going to be directing all questions to the experts themselves. Look, so earlier this week, Google released a research paper. They said that they're getting closer and closer to cracking crypto encryption. By 2029, that's kind of the line in the sand. Google has issued a warning saying, please, everyone who is involved in crypto, make sure that you're watertight before this happens. One of the realizations was that the number of qubits required to unwind ECDLP 256, which is one of the more common cryptographic systems, we need 20 times less qubits than previously thought. So basically, the quantum researchers, they're getting closer and closer to cracking crypto wide open. And as soon as that happens, if they find a public key, they can then derive the private key pretty quickly. That's the overarching idea. I don't know the validity of that. Obviously, it's a very, very scary headline, and a lot of people have had very, very scary reactions. If you look through the article there's a lot of people saying this is a kind of a doomsday, like you've said. One guy even suggested that Google actually already knows how to start cracking open Bitcoin wallets, and that they've given people kind of 3 years to really sort themselves out before it's basically the end of times for crypto people. CZ hit back. Yeah, CZ hit back and he said, look, all that crypto has to do is to upgrade itself to quantum resistant algorithms. Other analysts have come out and said that, look, Solana with its 400 millisecond block time, that actually cuts down a lot of attack vectors. Look, quantum computers are meant to be faster than normal computers, so I'm not sure the validity of that. Again, we're not quantum researchers here, so we can only speculate on what other people have said. But look, going back, as you mentioned, to your point, Jack, Solana and the Solana Foundation have had a bit of foresight to look into this ahead of time. Project 11 has done a bit of quantum assessment on Solana's resiliency to this. They've started deploying things on testnet to try and make sure that we can get around this. And there was another little bit here, I believe. The use of Winternets-based solutions are also being deployed. So look, if there's a quantum researcher who wants to come and chat to us about this and alleviate some of our concerns, you're more than welcome. But the overarching story is that, look, quantum is coming. Teams like Solana, like the Solana Foundation, like Project 11, they are thinking about it. They are working on solutions. And hopefully everything comes out all right at the end of the week. That's all I've really got to know on it. Thomas, have you seen any tweets going around on Twitter that might reinforce this thesis?
Yeah, all right. So what I've seen, quantum is basically like crypto in 2017. So it's like they launch a white paper and a coin and it's off to the races. It's all theoretical at this point, right? Like this wasn't like we have this right now and this is what we're doing. It was we potentially see a way in that it's going to take a lot less qubits than we thought. So like I'm not that worried about it right now, but I think that the narrative is very sticky. Like I don't think it's going to go away for Bitcoin, right? Like I think that that's something that is on top of people's minds. Like everyday investors see Google and they're invested in Google, and they'll see the latest research comes out, and are they going to allocate to Bitcoin because of that? Maybe not. Is it going to be they're not going to dump it, I don't think, right away, but it's going to hold people back, I think. And I know, SolanaFloor has done some reporting as well, where we're pretty far ahead a lot of others when it comes to a lot of the quantum like protection. So I think that's a good, like we have a good start on it, at least a good idea of how we're going to move forward on it. But I mean, it's interesting, right? Like it's something that, it's like the frontier of technology, and there's
but that's exactly the point. That's exactly the point here, right? It's at the frontier of something. And when we think about sort of transformative technologies in general, there's always a doomer class. There's always this is going to end employment, crash the economy, ruin the environment, pollute all of our rivers, whatever the transformative technology is, and whatever industry it exists in, there's always this sort of counter reaction as far as sentiment and headlines goes. I think what's different now, particularly in 2026, is that for a long time people have been talking about AI and the impact that that's going to have in a negative way. And over the last, let's say, 2 to 3 years, it turns out most people were maybe underestimating how quickly it would impact the labor market. Of course, you had some people that had overestimated it, but they were definitely a minority. So I think people are taking that lesson a little bit too hard. They're saying, look, I was maybe blindsided to a certain extent by AI and how quickly it would proliferate and impact the labor market negatively. Maybe I should also think that way about this quantum threat. So to your point, maybe the headlines make it look like it's a bit more of a powerful threat than it is, at least for the time being. That's not to say that if we don't act now, we won't deal with the negative consequences. As Finn said, we are not cryptographers, we are not scientists even, and we're definitely not quantum researchers. So we can only report on this, and we will continue reporting on this. If we know anything about the Solana Foundation's moves, if we know anything about what's being deployed on testnet, we will keep you informed. But for now, we do have to move on to our next story. Story number 5.
Sorry, Jack, I am going to jump in because there is two very key points. There is two very key points I want to bring up in this. One is that, if quantum does deliver on all its promises, it's not only crypto that's going to be affected. It's going to be basically any encryption scheme that uses elliptical curves, apparently, as Nick Arman says. from the Jito head of governance. So look, the effect is going to be massive. It's not only going to be isolated to crypto. The second is this kind of headline in other times would have sent Bitcoin down, 20, 30% in a day. Here we are, this news came out and Bitcoin's probably up on the week. So maybe that suggests we're closer to a bottom than a top. We have bad news, prices are basically unaffected, no more forced sellers. This could be one of these bottom markers that we look for when we, are back up in higher prices and we're looking back at when everything turned around. So want to give people
generational entry, says Finn.
Generational entry, yep. Want to inject a bit of optimism into the conversation.
Much needed after the week we've had, I feel. Okay, story number 5. Now, Sunrise brings SUI to Solana as network outperforms leading sexes in trading volume. Obviously, as you can tell, this is about SUI coming to Solana via Sunrise. Now, interestingly, outperforming major sexes in trading volume is great to see. The headline is it's optimistic. I'm curious to what extent it's new. I feel like a lot of people have been talking about Solana being the everything chain for quite a while now. It didn't necessarily shock me. Is there something under the surface, something behind the scenes that I'm missing here, Finn? Why are people excited about this?
I think it's exciting because it's just a continuation of the thesis. It's a reinforcement of this idea of internet capital markets. Sunrise, they're doing a great job bringing over foreign layer ones over to Solana. We've had AVAX, we've had Hype, we've had Monad on its day one launch. SUI joins that growing list of foreign coins on Solana. But I think, the bigger story here is what happens after, and that this just reinforces the belief that everything is going to be traded on Solana. Solana's spot markets are absolutely ripping. They have been for many months now. There's a graph further down that article there that shows that Solana spot trading volume actually exceeds Kraken, Bybit, and Coinbase. Still a bit to go before catching Binance, but effectively, people are trading on-chain more than they're trading on sexes. This is a trend that has only been accelerating. It's been continuing. I think everything that Sunrise is doing is working towards continuing that. So look, it's very exciting. Other quotes from this article come out and say that Blade from the Solana Foundation has also said that currently Humidify via Titan is the best place to trade ETH in the world. So people are seeing this, people are understanding this, and they're seeing that it's actually better to trade on-chain than it is to trade on a SEX. It used to be that centralized exchanges had much better execution, you get much better prices. That's changing. Solana's micro-market structure is improving at an extraordinary pace, and it is becoming the best trading venue and the most accessible trading venue in the world that is running 24/7. Finally, down further to the bottom of this article, I've transposed 2 graphs against each other. Solana stablecoin spot volume is bigger on Solana than it is on every other centralized exchange in the industry. So if people want to be trading Solana, it's happening on Solana. That's expanding to more and more assets like we've seen with SUI and with the Sunrise launch there. So look, it's standalone. It seems like it's just another story that we've been tracking for a while, and this continues to happen. I think it's just it's reinforcing a trend, and it's reinforcing something that is the North Star for Solana. So that for me is why it's so exciting.
Yeah. And I mean, what we're seeing is it's the everything exchange. I would assume that Raoul Paul is probably ecstatic with this. He's super big into SUI. But another thing, so say we combine this story with the SoFi story, right? So SoFi is integrating Solana. They can now trade these assets, on Solana and provide that for their customers. Like that's a pretty big advantage. Not only are they going to give, better pricing than what Coinbase can offer, like significantly better, it's better than any centralized exchange that they could offer if they offer that, right? So when you start putting these together and stacking these stories up, like this could be really massive, right?
Fingers crossed, it does turn out to be a bigger story, and it continues, and it's not hindered in any way by the events of April 1st. Now, I'm going to switch our attention back just before we get to my favorite part of Finn's newsletter, which is the honorable mentions, the stat of the week, the state of Solana in a tweet. Let's go over to story number 6. This is an interesting one. I was very surprised. I'll be honest with you. The headline here is StraitsX launches SGD, that's the Singaporean dollar, pegged stablecoin, amidst calls for on-chain Forex markets. Forex market volumes on-chain have been exploding as well. It's an interesting angle here. Finn, I found this quite interesting for a few reasons. Part of it is that I believe it's your article, wrote that there's only $5,000 in liquidity. So it's basically unusable currently, but this again sort of fits into a larger story. If you think back in time, I know it's difficult, all the way to maybe 3.5, 4 years ago, Singapore was one of the first countries that had an on-chain treasury, tokenized treasury transaction with Japan. And I think it was JP Morgan that facilitated that on JP Morgan chain. So not great, but at least it showed at the time that it wasn't only the MAS, the Monetary Authority of Singapore, that was quite forward thinking. It was also the financial sector itself, because they were putting all these assets on chain. Once again, SGDPEX stablecoin is perhaps part of a bigger story, and as a standalone story, because of this $5,000 limitation and liquidity isn't massive. Finn, talk me through this. Talk me through why Forex matters, actually. I think that's the bigger story here, right? Is the size of Forex and what really happens if we ram it all on chain.
Yeah, I would first of all echo that thesis that the larger argument here is that Forex coming on chain is kind of the more interesting aspect of the story. Obviously, very cool that StraitsX is bringing their Singapore dollar backed coin over to Solana. It's been on Ethereum, Base, Avalanche, it's been on all these places for a while. But yeah, to your point, there's only $5,000 in liquidity on chain. So if any person anywhere in the world, wants to go and buy some Singaporean dollar on their phone using a DEX, they're gonna have slippage, and it's gonna be disappointing. I think most of these swaps are happening through StraitsX proprietary app. It's KYC based. You need to be verified. So, look, I don't see a whole lot of people diving into to get their fingers soaked into that. But what is interesting about this for me is that it shows that Solana is steadily moving towards a greater variety of non-USD stablecoins. And that's great, first of all, because people like to hold their own local currencies. They like to transact in their own local currencies. But the global Forex market is the most heavily traded market in the world. I was trying to do some research on this, and the estimates show that basically anywhere between $7 and $9 trillion gets moved through Forex markets every single day. So if the on-chain economy can capture like even 0.1% of that, that's already more than what we're doing in perps volume every single day. So the opportunity is massive. Mert came out and he said, look, retail Forex fees are extremely high. Why isn't this happening on chain? Chase Barker came out and said, we need to get this on chain now. Other people have said, why is this not happening now? And there's a really good tweet here from Z. He says, my guess is crypto traders aren't particularly degen/high risk. They want something with they don't want something with slow turnover like foreign exchange. So with no retail in the market, there's no one for sophisticated players to harvest. I think that's changing, right? If you look at something like GM Trade, which is now Solana's biggest perp sticks, a lot of their volume comes from Forex pairs. Granted, it's hyper leveraged at 500x. So even if the market itself doesn't move a whole lot, traders can still find a lot of value or a lot of loss, obviously, by diving into these markets. It seems like untapped potential. I remember back when tokenized stocks started launching, people said, well, why do we even want this? Is this even a big deal? If I want stocks, I'll just buy them from a broker. That's what they're saying about Forex now. We'll see if they're still saying that about Forex in a year's time, in 2 years' time. I think this is an opportunity that people are sleeping on to a degree. I think there's huge untapped potential in this. And yeah, maybe we're just ahead of the curve. Let's see if Chase is right, and putting this market on chain is in everyone's best interests. Thomas, you're on the ground, you're in the trenches with the perps traders. Do you think there's appetite for Forex trading at 500x leverage?
I don't know. It's definitely an interesting market. Like I personally wouldn't even know where to get started. And my original thought on this was like, you can't 1000x a Forex trade, but then if you had 500x leverage, you probably can. So like I personally probably will not be trading these because I know, very little about the Forex market, but there's going to be people that are. And, like you said, with stocks and tokenized stocks and equities, it's a really big market, and we might not be the end user of this, but we can offer a product that is better than the best offering right now, right?
That's a really good point. We might not be the end user of this. For weeks now, we've been talking about, trying to decipher the real meaning behind the following statement. Perhaps blockchains weren't built for humans, they were built for agents, right? People have come out with this idea that we're sort of just the crash test dummies, the guinea pigs of this on-chain experiment, and that AI agents employing other AI agents, which are potentially then employing humans, will be a vast majority, if not all, of the transactions on chain. So I can see a future where a huge number of AI agents are doing high frequency trading with forex pairs. I mean, think back to the late 80s, where there were billions and billions of dollars extracted from the British economy, famous short of the pound. So when people go into forex trades, and we're talking about the biggest institutions out there, they go in with size, and if it's going to happen on chain, I suspect that will be happening in size as individuals come and see something they can exploit, assuming there's somebody to take the other side of the trade. And I think agents will come in and probably harvest some of that as well. My take, back to you.
Well, look, one of the arguments that's been coming out recently is that obviously we're living through a time of great political unrest. There's geopolitical turmoil and markets are in absolute flux. So we've seen that the normal hedges against uncertainty, like gold, actually haven't performed that well when shit really hits the fan. So a lot of people are asking, well, if I can't hold gold, if I can't hold Bitcoin, if I can't hold stocks, I don't want to hold dollars because of devaluation. What do? Do I go for something like the Swiss franc? All of a sudden, shorting the dollar against the Swiss franc becomes an extremely appealing option. And if you can get 100x leverage on that, maybe that attracts the crypto native degenerate. I think this is an untapped market. I think more people need to be exploring the potential here. Obviously, it's not as glamorous as crypto and Bitcoin and tokenized stocks, but nothing is until it starts attracting volume. No one in crypto cared about gold until it started moving a lot. And the same thing could happen in forex. Maybe we're just 6 months early to the next big trend.
I think we are. And I mean, I tell you what, you slap a 500x in front of any pair and people are going to become interested. They'll perhaps start educating themselves about it. Go watch some geopolitics shows. You can tune into the big picture for that if you want. You can go watch some trading shows, people trying to understand forex. I have a feeling as the level of education and understanding around forex increases, as you mentioned, Finn, as the level of geopolitical uncertainty and the political risk in general on fiat currencies increases, people are going to say, oh, actually, I can probably trade this. And I think that volume is going to increase dramatically in the coming months.
Yeah. No one
on
chain was trading oil.
Sorry, what's that, Finn?
So I was just going to say, nobody was trading on-chain oil until about 3 months ago, and now it's been one of Hyperliquid's biggest volume markets for the last few weeks. So
absolutely, same with
the demand will be there as soon as it starts. Yeah. Sorry,
that's a good example. It's like if you're trading $7 trillion a day, and we can give better spreads in crypto on that. What's 1% of 7 trillion? It's a lot of money, right? So anybody looking at different venues for trading this, say they are professional in TradFi and they see, hey, I can do this for a little bit cheaper. That small amount actually makes a big difference. So if that's something where we can provide a better product, I mean, we should 100% go for it, right?
Absolutely. Okay. In the interest of time, I'm going to do a very quick recap. We've spoken about a lot of things, and then we're going to dive into some honorable mentions. I'm really curious which one of these is TB's favorite. I have already made my decision ahead of time, and then we're going to dive into the state of Solana and the stat of the week. So a little bit of a recap. Drift protocol, unfortunately, we talk about that in a lot of length. $285 million exploit affected more than 20 ecosystem apps. A lot of user funds were also lost in that. So we do wish everyone a speedy recovery as much as possible. MetaDAO, their controversial ICO, P2P.me, after some insider trading allegations. We spoke about SoFi choosing Solana, $50 billion enterprise banking infrastructure incoming. Google warning us about a potential quantum computing threat that could be existential by breaking crypto by 2029. Seems unlikely for the time being, but everything can change overnight. Sui bridge to Solana as DEX volume beats sexes. And of course, the Singapore dollar pegged stablecoin launching, which sparks that Forex conversation we were just having. So honorable mentions, usually my favorite part of Finn's spicy newsletter. We don't have a dishonorable mention this week, I think. Correct me if I'm wrong, Finn. But let's run through these quickly. Little rapid fire round of honorable mentions. And then let's find out what TB's favorite is.
Alrighty, this week's honorable mentions. Circle unveils SirBTC, a DeFi-ready asset pegged to the value of BTC. So if you've seen WBTC before, it's basically the same thing, but run by our friends over at Circle. SBI Holdings B2C2 taps Solana as its primary stablecoin settlement layer. MoonPay eliminates stablecoin on-ramp fees for AI agents. Solana records $557 million in tokenized security volume in March, a new monthly all-time high. Solana's RWA sector hits $2 billion in total market value, up from $215 million this time last year. So that's a staggering increase. Superstate enables DeFi utility for Galaxy shareholders. Sesto launches themed investment baskets. So this is kind of like on-chain ETFs of baskets of assets. Very cool. And Stable issues the first ever blockchain native mortgage on Solana. Thomas, which of these is grabbing your attention the most?
First of all, that is a lot going on. And
So
second of all,
much.
it's going to be the AI agents on-ramping for free. So I'm working on a 3-part series right now all about AI agents, agent-to-agent trading. And I think that's going to be the big narrative coming up. So I'm super excited about it. I'm gonna on-ramp some money for free and test it out right now.
Yeah, I thought that
I
might
was
be your
torn.
favorite.
I'll be honest with you, I was very torn. I knew TB was going to gravitate towards the AI agent story there. So in I guess descending order of deliciousness, I think the RWA sector hitting $2 billion in market value is incredible. The reason why I'm going to pick that over some of the other ones is quite shallow, I suppose. Almost a 10x. So my hope is that if we make enough noise about this, that next year when we're talking about it, it will be a 10x and that number will be $20 billion. I think it's very important for Solana's maturity in general that the RWA sector grows rapidly and it's almost a 10x, and I wish it was. Some of the other stories that I found very interesting, Sesto launching themed investment baskets. I love when you make it a themed investment basket rather than like an ETF or something. It sounds so much more fun, right? Like a themed birthday party. Or a Halloween party or something, rather than a boring exchange traded fund or like boring TradFi instruments. I'm super excited to throw some money at these themed investment baskets. I'm curious how niche some of the assets that make them into the baskets are going to be. I'm curious if there's going to be baskets that have, some of the majors are ETH, BTC, Sol, and then really obscure meme coins in there as well. Curious to see how that plays out. And I'm also very excited about this Superstate enabling DeFi utility for Galaxy shareholders as well. I want to see more of this utility being enabled for shareholders type of stories. I feel like the narrative of DeFi utility sort of died out a little bit, and I think that would be net positive if we bring that back. Anything stand out to either of you as a story that's going to get recycled, something that we are necessarily going to be talking about for the coming weeks?
Probably not in the coming weeks, but I think to your point, Superstate enabling DeFi utility is going to be something that's going to happen a bit more and more. I've mentioned before that a lot of Solana's RWA market size is actually made up in treasury funds that are restricted to accredited investors. They have 5, 6, 7 holders, and you can't actually do anything with them. So in many ways, it almost defeats the purpose of having these assets on chain if no one can actually use them.
I know that annoys you. You've mentioned before that frustrates you a lot.
Yeah. So look, I'm happy to see Superstate enabling this for Galaxy shareholders. I think it's a step in the right direction.
Excellent. Okay, moving on to our stat of the week here. Lots of green bars. We love to see it. Finn, talk us through.
Yeah, wanted to steer away from the obvious stats of how much money was lost over the past few days. Let's go with this one here. Solana surpasses 10 billion transactions in Q1 2026, its biggest quarter ever. Total transactions have also crossed 500 billion, more than all other chains combined. So look, it's a bear market. Prices are going down. Apparently, on-chain activity is going down as well. But yet here we are with 10 billion transactions in 1 month, wrapping up the biggest quarter ever. So look, it's not that on-chain is dead. On-chain is alive and kicking. It's just happening in a far more mature way. It's progress, I think.
Absolutely. And finally, Finn, state of Solana in a tweet. This is interesting. The screenshot doesn't quite show the detail that I wanted to, but talk me through this. And I think people should go and check this out as well, because it speaks to the heart of the hack, the exploit that we were discussing in length today, the $285 million of exploit from Drift Protocol. And people are going out and sort of vibe coding tools, arguably, right? This is a tool for the ecosystem to learn from and to improve and iterate. So what's going on here?
Yes, so today's State of Solana in a tweet comes from Gumshoe, or as he's now known, Gum Says. We've seen a lot of this past few days. People have taken it upon themselves to vibe code little dashboards about Solana DeFi security levels. This one from Gumshoe covers multi-sig addresses, approval threshold, list of multi-sig members, and links to the docs of each protocol. So quite simple, but it tells more of an overarching story that in the wake of this hack, the wake of this exploit, everybody wants the ecosystem to be better. So everyone's trying to hold each other accountable. Everyone's trying to tighten up their security practices. That ultimately leads to a more resilient DeFi environment for everybody. So look, I'm proud of the Solana community for this. Everyone's pulling together to try and make it better for everyone collectively. So look, that's despite the hardship of the hack, this for me is the current state of Solana, that everyone's just trying to be better and trying to help everyone else be better as well. So hats off to everyone who's working on stuff like this.
TB, what do you think? Do you think some people are saying, oh, it's game over for Solana, no one's going to interact with Solana perps, or Solana deposits are going to go down, or Solana ETFs are going to crash? There's been a bunch of doomer tweets. We're not even going to touch on the grave dancing that's been done because I think it's very distasteful. But do you agree with Finn generally? Are we definitely going to recover from this?
I mean, I don't know about definitely, but I definitely lean towards yes. I don't know. I mean, we've had major setbacks before. We've got a lot of teams working on bettering like every single part of their stack, right? So, we've been talking a lot about perps and different ways that people are trying to get there. There's obviously Solana upgrades that are going to be happening that are going to help it. So, I mean, there's so much work being put into this. There are teams that are working so hard at this that, I can't see us not taking this and each of these teams taking a look in the mirror and saying, all right, what can we do from this point on to make sure this doesn't happen to us? Like this, I mean, this is a wake up call for everyone, right? It's unfortunate that this is what's going to push everybody to, have a lot better safety practices. But I mean, that's how it is. That's just how these things go. I mean, it's going to take a little while for everyone to recover and get back, but I'm confident in the teams that are building right now.
We're on the right path. Yeah, I would echo that. I would agree that a lot of the multi-sig practices are going to have to be improved necessarily, and I feel that people are going to learn a lot about social engineering as well, and hopefully be more resilient going forward. All right, that is everything we have for the week. If you want Finn's full newsletter, which you should, with all of his deep dives, all the articles, the spicy takes, then go to SolanaFloor.com, subscribe to his newsletter. It's free, it's delicious, definitely worth your time. You will learn a lot and sometimes laugh as well. Don't forget, we have the big picture every Thursday at 11 a.m. Eastern time. So we break down the macro, the regulation, how all of it sort of impacts crypto and Solana as well, how everything's moving markets from the truth socials all the way to the hacks in the ecosystems. Next Thursday, we have a very special episode with none other than Mr. Mike Reed from Franklin Templeton. Again, huge asset manager. I'm sure you've heard of them. Mike is the Senior Vice President and Head of Digital Assets. And as we found out the last time we spoke to him, he actually spends a huge amount of time on chain. And the guy has a solid grasp of what we're all going through, both as an insider and I suppose partially as an outsider, as someone who wears a suit and goes to work with other TradFi guys, right? So very interesting guy. I love that he's super on chain. It was a good surprise when Thomas and I spoke to him last, and it's going to be a very insightful conversation. And the following week, we have an absolute banger as well. James Seyfarth, you've probably heard of him. He is an ETF analyst at Bloomberg Intelligence, specializing in things like crypto, commodities, thematic ETFs. Also a great speaker and a fun guy as well to chat to. So excited to pick both of their brains in the coming weeks about everything macro, everything crypto, everything politics, Clarity Act. I'm sure we'll touch on that. And of course, we're going to figure out what all of this means for the future of Solana. With that, Finn, Thomas, thank you both very, very much for chatting today. And I'll see you both next week.
All right. Thanks
again, Jack. See you, fellas.